Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore FinTech Festival, and joining me for this segment, we have Rehan Ahmed. He's CEO of Marketnode. We're here to discuss an industry switch, a formula for fatigue and tokenization and blockchain adoption in traditional finance. This is a great topic, Rehan. Excited to discuss it. Welcome back to TradeTalks. Let's talk about the main challenges financial institutions are facing when they're integrating new technologies, particularly in that context of fatigue.
Indeed. And I think I have some sympathy for that, because when you look at financial institutions, banks, asset managers, they're actually running these incumbent systems right now because they have to, from a KYC perspective, regulatory burden, licensing and reporting in many markets, right? So the fact that blockchain works or smart contracts work better and they provide efficiency is great, but when you look at the return on investment, you actually have to keep in mind what it takes to connect the old tech to the new tech, right? And just because the new tech works incrementally better doesn't make the business case strong enough, right? Yeah. So a lot of banks, financial institutions go through a lot of analysis on this, and it does end up taking a lot of time. It
certainly does. So when you think about doing this more collaboratively for the next gen infrastructure, how do you go about thinking about that? Because, to your point earlier, financial sector, it's so heavily regulated. We have our own sets of systems that you just can't simply, take out, replace with the next gen infrastructure. So how should you be approaching that from an industry-wide perspective when you want to think about growing and phasing in these new technologies?
Indeed. So usually you tend to hear this a lot, that blockchain is a technology looking for a solution. We believe in switching that around and thinking about, when you look at large financial institutions in Asia, what are some of their challenges? And let me talk a little bit about the funds market, the mutual funds market. When we got set up in 2021, we actually looked at industry-wide problems, not just single financial institution problems. Singapore, as an example, according to our regulator MAS, we have 4 trillion of AUM booked in Singapore, more than 1 trillion of funds available for sale in Singapore. And believe it or not, a lot of the processing for these funds, how does a fund distributor get an order to an agent, is actually happening over paper today. So you just take that pain point to start with, and you think about why that takes 10 days to settle, for example. Blockchain just becomes a design choice at that point, right? So the lens we took was, we tried to look at markets that are broad enough, had enough pain points, and then introduce DLT as a technology choice, versus starting with, I have a technology kit and it's DLT enabled, what flow can you put onto it, right? So the choice of asset class, the choice of the pain point you start with, becomes extremely critical in this.
Yeah, well, it makes sense. You're looking for a problem to solve, not necessarily just create solutions around something that doesn't exist. What about overcoming the build versus partner dilemma, this us versus them ethos that's out there?
So I think if you look back to 2018, when I remember most financial institutions, the really large ones, started to put together R&D centers, right? So from 2018 to, I would say, 2021, there were very large institutions doing single institution projects. Then we started, the second phase was where regulators started to put together sandboxes. We're in Singapore FinTech Fest, Project Guardian is a great example, we have Project Ensemble. But actually at some point, for some of the institutions, the question of the ROI, we've been running this for 5 years, for 6 years now, the question of ROI starts becoming very important, right? The second is actually, can you develop some things quicker outside of your normal BAU processes? So as an example, we announced HSBC as our Series A investor in May of this year. Euroclear is announced as a strategic investor in us October. That's a very good example of partnership is coming a lot more naturally versus being forced, because certain jurisdictions are just thinking about collaboration in a very different way. So for example, in markets like Singapore, we're here at Singapore FinTech Fest, it's all about collaboration. Collaboration is actually easier to manage than large federated unions, for example, right? So I would say geography does play an advantage in the build versus partner.
It certainly does. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me for the Singapore FinTech Fest. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.